This is Jim Martens. Today I want to walk you through a recent example of Eurodollar of how the wave principle often allows us to identify a turn in the market. Again, we're going to use Eurodollar, and I'm just showing this daily chart to start to show you that Euro had been declining for quite some time. In fact, from January 2021. So for more than a year, and from above 123 all the way down to below 112, the euro fell fairly steadily. But recently we've seen evidence that maybe a reversal is underway. And let me walk you through why. And to do so, I'm going to use the wave principle. If you aren't familiar with it, it suggests that markets move in waves. 5 waves in the direction of the trend at one larger degree, and 3 waves against that trend. There are only 3 rules associated with wave principle and a handful of guidelines. But even though that doesn't sound like that much material to work with, it's very powerful and helps us, as I said, identify market turns. So let's begin from the low you see on the bottom right of the chart. And on a 4-hour chart, that's what the rally looks like. Now, my eye falls immediately to the structure, the price structure. It looks like a 5-wave movement from 111.21. I count it like this, and the rules that apply here are this. At this point, wave 4 cannot enter the price territory of price 1, which you can see does not occur, and wave 3 cannot be the shortest of the 3 impulsive waves, 1, 3, and 5. By impulse, I mean in the direction of the trend. So Eurodollar satisfies the rules for an impulse or 5-wave movement. We expect those to unfold in the direction of the trend at one larger degree. So we have evidence that a reversal has occurred very quickly after a more than year-long decline. Now, when it comes to the subsequent correction that would complete what I refer to as a reversal process, impulsive rally, corrective, setback, sequence, the rule there is that the correction cannot retrace more than 100% of the prior impulse move, in this case the advance from 111.21, and it's rare to retrace that much. So when we look at the start of this, that 5-wave movement would be either wave 1 or A of a larger advance in euro, so we have labeled it as such. The subsequent setback can be counted in 3 waves, which we use letters for, A, B, and C. And that suggests that a correction is likely complete. Notice it's well above, the end of the correction is well above 111.21. But there are a couple guidelines we go by as well. We use Fibonacci relationships within the wave principle. They seem to go well together. And one of those is that corrections often retrace 61.8% of the prior impulse movement. And as you can see here, the price low of the correction falls just above the 61.8% retracement. So the structure of the setback is consistent with the correction, and so is its depth. We also look at relationships within the wave patterns. In the case of a correction, wave C often travels the same distance or a similar distance as wave A, and you can see that in this case, wave C traveled just a tad bit more than wave A. We never expect exact, the prices to turn on the exact measurements. We look for the market to turn from close to them, and in this case we had 2 unrelated measurements that formed a fairly tight target area, 112.63 up to 112.94. Notice that the low fell right in the middle of that range. So most importantly, from a price structure, we had a point of view, we had evidence that a turn was underway, 5-wave advance, 3-wave setback, and given where the turn back to the upside occurred from within that target range, the wave principle allows us to start managing our risk. In this case, I'd say that if euro has turned, the low is in place at 111.21, but because a correction of the first rally ended at 112.80, it allows us to consider moving that line in the sand to 112.80. And from that secondary low, we've seen euro rally. And while I won't show it here, as part of our intraday service, we were looking at at shorter term charts, 15-minute and hourly charts. The setback that started from around 114 ended after 3 waves, just like the setback from near 115 down to 112.80. So we could make the case that perhaps we should use 113.23 as a new low to work against. So I just want to reiterate how the wave principle, with just a few rules and a handful of guidelines, allows us to track markets, identify the trend, identify areas where corrections should end and where they should not go, and then limit our risk associated with an outlook that, in this case, euro dollar has turned to the upside. But the wave principle goes further than that, because it also gives us an idea, now that we have this reversal sequence in place, of where euro dollar should go, how it should advance from here, and where it might head to, target levels above the market. And that's the kind of information that we give within our Currency Pro service.